Welcome back to XRP Update. Today's update starts with a question that every XRP holder should ask themselves. Why are the biggest XRP wallets continuing to accumulate while so many retail investors are still sitting on the sidelines? According to recent data, wallets holding more than 1 million XRP now control over 74% of the circulating supply. In just 6 months, these large holders added billions of XRP, while much of the market was focused on fear, uncertainty, and short-term price action. Think about that for a moment. While many investors were panic selling during market pullbacks, some of the wealthiest XRP holders were doing the exact opposite. And that raises an important question. What are they seeing that most people still don't see? Because today's story isn't really about price. It's about where blockchain technology is heading next and why some industry insiders believe we're still in the early stages of something much bigger. One of the most exciting conversations happening right now revolves around tokenization. Many people talk about tokenizing real estate, stocks, bonds, or commodities. But what gets overlooked is what happens after everything becomes tokenized. Imagine building blocks. Once assets become digital, they can be combined, split, reorganized, and integrated into entirely new financial products that don't even exist today. Years ago, nobody predicted video streaming, social media, ride-sharing apps, or the modern digital economy when the internet was first introduced. The same thing could happen with blockchain. The biggest opportunities may not even be the things we're discussing today. They could be products, services, and financial systems that haven't been invented yet. That's one reason many analysts continue talking about tokenization as one of the largest opportunities of the coming decade. Because once assets become digital, innovation accelerates. And when innovation accelerates, liquidity becomes more important than ever. That's where XRP enters the conversation. Many XRP supporters believe the long-term value of XRP comes from its ability to support massive liquidity needs across a growing digital asset ecosystem. Now, another discussion gaining attention involves the future scale of tokenization. Some projections estimate hundreds of trillions of dollars could eventually move onto blockchain infrastructure. Whether those numbers become reality remains to be seen. But the important takeaway is this. The financial industry is clearly moving toward digitization. Banks are exploring blockchain. Asset managers are exploring tokenization. Governments are studying digital assets. And major institutions continue building infrastructure behind the scenes. What's interesting is that many people still assume price appreciation happens slowly and gradually. But some XRP supporters believe that utility-driven demand could eventually create a completely different market environment. The idea is simple. As real utility grows, institutions begin participating. As institutions participate, market attention increases. And once broader investors recognize what's happening, speculation follows. At that point, demand can accelerate much faster than many people expect. This isn't a new idea. Years ago, Ripple executives discussed the basic principle of supply and demand. When demand rises while supply remains limited, prices respond. It's one of the oldest concepts in finance. And many XRP supporters believe we're moving closer to seeing that principle play out on a much larger scale. Now, speaking of major shifts, let's talk about another story grabbing headlines. SpaceX continues reaching new valuation milestones. The company has become one of the most valuable businesses in the world, attracting enormous investor attention. But what may be even more important than rockets is the infrastructure SpaceX is building through Starlink. Because Starlink isn't simply about internet access. It's about connecting parts of the world that were previously disconnected from modern financial systems. And that's where things become very interesting. Many people have talked for years about banking the unbanked, giving financial access to billions of people who currently have limited participation in the global economy. Reliable internet is one of the key requirements for making that possible. Without connectivity, digital finance cannot scale globally. With connectivity, entirely new economic opportunities become available. And that's why many observers believe technologies like satellite internet, blockchain, digital payments, AI systems, and tokenized assets may eventually work together as part of a much larger transformation. The infrastructure is being built. The pieces are being connected. And many believe we're only beginning to see how everything fits together. But the biggest question remains, when does the market fully recognize what is being built behind the scenes? That's where things start getting really interesting. Now, one of the biggest catalysts investors continue watching is regulatory clarity. For years, one of the main concerns surrounding digital assets has been uncertainty. Companies wanted to build, institutions wanted to participate, investors wanted exposure, but everyone kept asking the same question: what are the rules? That's why so much attention is currently focused on legislation like the Clarity Act. Many industry leaders believe that clear regulations could unlock the next major phase of crypto adoption. Not because regulations create value by themselves, but because they give institutions confidence. Confidence to build, confidence to invest, and confidence to launch products at scale. Some analysts now believe the probability of meaningful crypto legislation passing is higher than ever before. And if that happens, many believe the market is not fully pricing in the impact yet. Think about it. For years, institutions have largely been waiting on the sidelines, not because they didn't understand blockchain, not because they didn't see the opportunity, but because uncertainty creates risk. Once those guardrails are established, the entire conversation changes. And that's exactly why many XRP supporters continue pointing toward institutional adoption as one of the biggest drivers for future growth. Now, another interesting signal comes from market sentiment. Recent data shows XRP sentiment has reached some of its weakest levels since late 2025. And historically, those periods have often been followed by strong reversals. Because markets tend to do the opposite of what the majority expects. When everyone is euphoric, risk increases. When everyone becomes fearful, opportunities often begin to appear. Many long-term investors have learned that lesson repeatedly. The biggest opportunities rarely feel comfortable when they arrive. They usually appear when confidence is low and uncertainty is high. At the same time, Ripple continues expanding its business operations. One of the most overlooked developments is that Ripple is no longer viewed simply as a company holding XRP. The company continues building financial infrastructure around payments, institutional services, stablecoins, treasury solutions, and enterprise products. Recent reports suggest Ripple is targeting significant revenue growth moving into the coming years. And importantly, those projections are separate from the XRP held on Ripple's balance sheet. That's a major distinction, because it demonstrates that Ripple's business model continues expanding beyond the narrative critics have pushed for years. The focus is shifting toward infrastructure, toward utility, toward real-world financial services, and that's exactly where many believe the next chapter of adoption begins. Meanwhile, institutional products continue entering the market. New futures products, regulated trading services, custody solutions, and investment vehicles continue launching at a pace we simply weren't seeing a few years ago. The infrastructure is becoming more mature, the market is becoming more professional, and the barriers to entry continue shrinking. Now, does that mean prices move in a straight line from here? Of course not. Markets will continue moving up and down. Volatility will remain part of crypto. But many investors believe the bigger trend is becoming increasingly difficult to ignore. More institutions, more infrastructure, more regulation, more adoption, and more real-world use cases. That's why many long-term XRP holders remain focused on the bigger picture. Not next week, not next month, but where this industry could be by the end of the decade. Because if tokenization continues growing, if institutional adoption accelerates, and if regulatory clarity finally arrives, the environment could look completely different from where we are today. And that's exactly why so many investors continue paying attention. Not because of what happened yesterday, but because of what may be coming next. As always, this is not financial advice. Do your own research, stay informed, and make decisions based on your own goals and risk tolerance. But one thing is becoming increasingly clear. The infrastructure is being built, the institutions are preparing, and the conversation around XRP is becoming bigger than ever before. Thank you for watching today's XRP update. If you enjoyed this video, don't forget to like, subscribe, and turn on notifications so you never miss future XRP updates. And let me know in the comments, do you think institutional adoption and regulatory clarity are the two biggest catalysts for XRP moving forward? Thanks for watching, and I'll see you in the next update.